I bet. Okay, so in today's lesson, we're going to be talking about premium, discount, equilibrium, and optimal trade entry or OTE. So let's get straight into it. On the left here, I marked out when price comes back into a discount and when price comes into a premium. And so basically what you want to be doing is you want to be shorting in a premium and longing or buying in a discount. Okay. So what does that mean? That means that usually, right, when you are seeing price go up and you want to take a long here, you want to look for price to do a come down into a premium or a discounted, in this case to go higher, into a discounted PD array before you take your long and go higher. And this is the ideal situation to get the best RR possible and to get the best entry possible. And the same thing goes vice versa with premium. You want to wait until price comes up into a premium PD array before going lower um and before wanting to go lower here. Now, you have your reclaimed fair value gap, and basically what this reclaimed fair value gap I drew out is it's just going to be your inversion fair value gap here that is in your premium or in the discount of your range here, right? And what happens is that price inverts this fair value gap just to come down into a discount or up into a premium PD array before coming back up, reclaiming it, and then may or may not use it later when coming back up. Okay, do we have any questions on that so far? Cool. So the next thing I'm going to go over, it's very similar to equilibrium or premium and discount is going to be equilibrium as well as optimum trade entry. So optimum trade entry is basically just a few levels on the Fibonacci here. It's 0.62, 0.705, and 0.79. I'll send the pictures of this into the chat for you guys. So in case you guys want to use this here. And what you want to do is same thing is you want to draw it from the range low to the range high here. And equilibrium here, I'm going to make it a little bit more clear here, is going to be your 50%. And this is going to be the deciding factor on what is premium. Anything above this is premium, and anything below this it's going to be discount. And it's going to be the same vice versa over here. And the idea is that if price is going to come into a discount or a premium, you want to see it, the optimum trade entry, right? You want to see it come down into this 0.62 to 0.79 retracement level, with the 0.705 being your actual optimum trade entry location. Do we have any questions about that before we go into some live examples here? Cool. So, just a little bit of a clarification. Equilibrium, it's going to be your 50% point. It's going to be the different. It's going to be where it's going to be the difference between your premium and discount, and of course, you can use this as a level for price to react off of. So let's get straight into a live example here, and we can kind of go over exactly what we want to see here, and we'll kind of go over your external and your internal premium and discount, just so you guys don't get hurt in the future when you guys accidentally do a premium or a um, discount inside an internal range here. So let's get right into it here. And this is Thursday's price action here. And we can start off by looking at market open, which happened right here. And we instantly came down here, right? So what do we want to do here? Let's look at our premium and discount here. So we're going to draw it from right here, the range low, and we'll draw it back up to the range high right here, right? And what can we see from drawing this is that we can see that this red line here, this is 0.5, this is our equilibrium point, and anything above here is in premium, and anything below here is in discount, right? And what did I say again before when we want to be shorting, we want to be shorting in premium. So now you have this premium PD array. Now there's a little bit of a problem here where the premium PD array is half in the discount, half in the premium. In that case, you want to use you want to just narrow it down to the portion that is in premium here, and you can draw your midpoint from right there, and you can see right in that midpoint we're staying below the consequent encroachment of that fair value gap, whereas if you had it here, we did close above. It's not too big of a deal because price has not inverted this at all, but just note that you can draw your fair value gap like this, and this is when you come into your premium here, and this is ideally where you want to see and where you want to short. Now you can short right off here if you want, or you can wait into a little bit of confirmation later. Now we can go over to OTE, which will be in our next example here, or this example here as well. So for OTE, ICT explains it in Forex where he uses the bodies, not the wicks due to spread. Now, I'm going to be using the bodies again, the same exact way here, and not the wicks. So this is just how I do it. You guys can use the wicks. It's just ICT always use the bodies of the candle, so I'm going to use the bodies of the candle. Here, we never ended up reaching that optimum trade entry, so that's totally okay, right? As long as we were able to come into this premium here, which premium is always by the wicks here, into this premium fair value gap here, then we're all good. So we'll go into another example where we can see that um, optimum trade entry take place here, I think. So here from your range low to your range high to your range low here, in this example, we're gonna be using the bodies here, right? This is your, I'm gonna go into replay mode just to make things a little bit more cleaner here, right? This is your OTE levels here, and I'm gonna get rid of this equilibrium point because if you are drawing it from the bodies, this is not your true equilibrium. So what I'll do here is I'm gonna draw this box here to dictate your premium and discount right here. So any heater array above here doesn't have to be a fair value gap is going to be your premium PDRA, and this is ideally where you want to be shorting from. And again, what did we see price do? We did see price come right back up into this premium section right here and come back down. So I'm just gonna get rid of the game box here, but I'm gonna put this line just right here just to show you guys where the equilibrium point is here. And we can see that again, price came right back up into equilibrium here. This is your OTE level right here, your 0.65 here, right? I mean 0.705 right here. This is your OTE level right here. So you want to find a PD array that is ideally in one of these areas here, right here. Unfortunately, on the 1 minute chart, there is no fair value gap here, but you can easily see this order block right here. And this order block was enough to send us down with the wick just touching that 0.705 level right there. All right. Do we have any questions about so far about optimum trade entry or anything like that? And yep, for the record, when you are again, I remember showing you guys in the drawing example there about the reclaimed fair value gap here. So you want to look for your reclaimed fair value gap here that is going to be located in the premium section of this right here and right. And we can see that right here is your reclaimed fair value gap that was from the previous one right here, and that has been used to come lower right there. Okay. Now, do we have any questions about that? And once again, that's right in OTE right there, right? Yes, we can use this one here, but I'm not going to really be using this one because this one is mostly formed in the discount compared to the premium. Yes, you can do the same thing and kind of draw something like that here, but I'm going to use the one that's more in the premium section right here. Do I use reclaimed fair value gaps? Yeah, I do use reclaimed fair value gaps. Um, a good amount, not always, but I definitely draw them out just to see what price does to it, as it does show order flows. Yeah. Why did it not hit CE of this fair value gap? Well, ideally, you don't want price to come back up and hit the consequent encroachment of any fair value gap, and that's going to show bearishness or strength going lower. When it doesn't have the strength to reach a consequent encroachment level, that means that we're going to see price come heavy on the downside, and that's kind of what we see here. Since we failed to reach that consequent encroachment right there, we were able to come down even lower here, right? You can see how fast we were able to displace right off of that, right after we came right back into this small inefficiency right here. And then we came down. You can also look at this inversion fair value gap and how our bodies, right, stayed underneath the consequent encroachment of it, right? And ideally, you don't want price to come up into the consequent encroachment of it, meaning you want price to just come into inefficiency and leave really quickly, like something like this. If we come to the 30-second time frame here, right, we can see this inefficiency right here, right? And we can see price just barely, not first presentation, just barely comes into it. And this is what you really want to see here, right? This is called an institutional order flow entry drill right here, or IOFED. Price just comes into it real quick and then displaces down quicker, and that's how you really know you're on the right side of order flow. The less time or in the less and the less deep it digs into an inefficiency is how much better your entry is going to be there. And even if we're on the 30-second here, we can see us come up back into that equilibrium point, which is or the OTE point here, and there is a 30-second SIB that can bring you down. All right. Any questions about optimum trade entry, premium discount, or equilibrium here? I'm gonna show you guys a few other ways you guys can use your premium discounts, equilibrium, as well as I guess I'll get into quarters of a dealing range. So I guess we'll go into your implied dealing range here, which we'll kind of get into. So your implied dealing range is from a range high that's already there and a range low that's also already there. And basically what it is that you want to see this is where you think the terminus is for price. So let's say you think this is a market maker sell model, right? And this is your implied dealing range, meaning this is where price is seeking to go before, or this is where you think price is going to end its sell program or whatever, right? So this is called your implied dealing range. So what you're going to do is again, you're going to draw your premium discount. In this case, I'm going to use a quarters, this quarter thing right here. So let's just get right into it here. So same thing here. The same rules apply here in your implied dealing range here. This just means if you are planning or if you think with pretty much 100% confidence that price is going to come down to this level here, and you assume that this is going to be the high for now, well, you can split this up into your premium and discount levels here, right? With your premium level being right here and your discounted level being right here, right? Just like that, you want to be shorting above this premium level, once again, of your implied dealing range. And that's what you have right here. Now, let's say that this works still, even if, let's say, you still think price is coming down to this low here. And let's say this is your new swing point here of your implied dealing range. Same thing you want to do, draw out your quarters one more time here, right? And same thing. If you're looking for price to come down to here, this is your most recent swing high here, right? You want price to come right back up into that premium in this range before shorting, and you want price to come right back down. And you don't want to be shorting anywhere here in this discount, as this is where you're going to get hurt the most, right? This is your ideal entry spot, and you can see both times of this implied dealing range, price came up into the premium here and came down. Let's say your drawn liquidity was this low here, right? It would be the same thing, right? Draw your premium and discounts, draw it from your highs to your lows here, right? Same thing here. Price came right up into a premium here, and we can even look at our optimum trade entry here to see if price did that. And you can do this. This is applicable the same exact way here. You would use the bodies here. Just for whatever sake, I'm just going to use the wicks here since that's what I have marked down. Same thing here. Price comes right back up into optimum trade entry of your implied dealing range here before coming down lower. So do we have any questions about the implied dealing range at all here? Well, if we don't really have any questions, I'm gonna go on real quickly and I can explain quarters and kind of how we ideally want to see the quarters be used here. Now, is another way to grade price here, and this is a little bit more of a niche topic here that is not explained as much. And so let's kind of just get right into it here. So we want to start off with this upper 25% portion right here. And this is where ideally of your implied dealing range, your low risk buy or your low risk sell is going to form. And then you're going to see price come back down here. And this is going to be a really important place here as you're going to want to look at for where price is going to be consolidating. And you can generally find price to consolidate around the equilibrium level of this place right here. But you can definitely tell a little bit of order flow and read a couple signs here of your implied dealing range. If you see price rip straight through the equilibrium point here, good chances are you guys are on side and you're not really going to see much consolidation if price decides to return up to premium or a disc or down to a discount. Now, I'm going to say price does not always have to come back into a premium or discount when you are shorting or longing. This is just your ideal place if you don't want to get hurt. Now, let's say you have a situation where actually, before I get ahead of myself, what we see here is price comes down right into our implied dealing range here, right? And we can see we do a little bit of consolidation around the 0.75 area region, and that's kind of where you want to see in each of these quarters is where you want to see that consolidation kind of take place here, right? And the ideal place to be shorting in your implied dealing range here is inside of this fifth zero point 0.5 to 0.25 level here. This is where ICT's fair value gap or whatever PDA arrays are going to form. And these are it's here where you want to be using here, because if price comes higher up into this 25, 0 to 0.25 area, we want to treat this kind of quarter here as a bag. So everything above here is going to be a breakaway gap after your low risk sell. So you have your low risk sell, which doesn't happen here, but we now want to treat this as a breakaway gap or a breakaway quarter here, right? Now we want to have our entry be somewhere in between this quarter here when we grade our range here, right? That's what we see here before coming right back down here. And we'll do it again with this dealing range if we wanted to change our dealing range. If we thought price was going to come lower here, we'll act the same way here, right? We want to see this become our bag here, and we want to see price come right back down lower. Now, there's another thing that we can talk about here, and that's when it comes to retracements inside this quarter. So let's say this is our dealing range, our implied dealing range low, and this is where we think price is going to determinist of the market maker sell model, and this is where price wants to end. What you want to see happen is you want to see price, once price comes and hits a level, right? Let's say we come down and hit this 25% level here. You don't want to see price trade. Oh wait, I shouldn't say that. Let's say we come down here into this 75% level here. You don't want to see price come back up into this 25% region, as it's going to be too big of a discount here, right? Remember what I said here? You want to see this be a breakaway gap, section. If we do get this too deep of a retrace here, right? This is going to be not very good for us here, right? We don't want to see this big of a retrace here unless the range is super small, like a super small range, like something like this, right? Then it's okay. But if we're doing a really big implied dealing range, trying to anticipate a whole market maker sell model or a whole market maker buy model, we want to see this portion stay open here, right? What does price do? Once you see price close below this next area here, you want to make sure it doesn't come back up into the premium area one more time, right? You want to see now this act as a breakaway gap once we get below the 75% grade right here, right? And then one more time here, once we kind of come back down, one more time right here, right? We close below our terminus level here, right? Now we're okay to see price come back up, but let's say we're still bearish. You still don't really want to see price come back up here. However, that's fine because this is your implied dealing range. As if your implied dealing range was down here, then it would be totally okay to see something like that happen, right? So does that make sense? Do we get what the quarters are and how to use them? Cool. Do we have any more example? Do we want any more examples of possibly premium discount, optimum trade entry, or anything like that? If you guys are looking for kind of like an entry model, or actually here, I'll go over your internal to your external range when it comes to your premium discount gaps or premium discount when marking it out here. And what you want to do is you want to make sure that in your premium and in your discount, right? When you're marking them out, and this is the same with marking out any range, right? That it's something like this. So this is going to be your original range right here, and this is going to be your premium and discount here, right? You have to wait. Similar, if you guys watch the break of structure video here, you have to wait until price comes up above here, makes a new higher high here or a new lower low here, right? Without that, you're still inside of this dealing range here. So anything here you mark out, let's say you mark out this, for example, is going to be internal. Now, there is nothing wrong with doing something like this as long as you understand where you are in the bigger picture here, right? Let me see if I can find a good live example of something like that being internal into the range here. And I mean, yeah, we could look at this. Right? So this is your dealing range right here, as this is our current dealing range in here. What an internal premium and discount dealing range is going to be a range from here to here. And again, like I said, there's absolutely nothing wrong with doing this, and this is what you want to be grading really if you are looking for your premium. If you're looking to short right here, you want to be looking for this as if this is your implied dealing range here, right? We also want to be looking at this here. But guys just have to make sure that if you guys are taking this short here, you guys do just have to remember the bigger picture here. And that remember that here we could have also came also into a discount busy here, and then before returning back into this premium portion of this internal range right here, right? So you guys can definitely get hurt if something like that happens. So just be wary of stuff like that. Um yeah, I'll show you guys another way to use premium discount or um whatever. So I'm pretty sure you guys are aware of um midnight open and stuff like that. So another way we can use to find kind of find the premium and the discount of the day is look at the daily candle here, right? Look at the previous day's daily candle here, and uh yeah, so you want to draw your equilibrium point or your premium discount point at the range high and the range low of the previous day's session here. And anytime you come above this here, this is going to be your premium for shorting, and anything below here is your discount for longing here, right? So let's come into replay mode and we'll come down here into like the 5 minute chart just to see what exactly happens here. And you guys can kind of see price comes right back up into this premium of the yesterday's range here before dropping down lower, right? And yeah, yeah, basically, yeah. And we can kind of continue this throughout every single day here, and you guys can just kind of mark it out. So I would suggest having a having something like that marked out just to know where you are. And you can do this kind of the same thing here. And yeah, usually you want to see price stay above or below premium discount, but it's not too big of a deal. But here again, right, this is Monday here. So Tuesday, anything below here is your ideal short here. We can turn on the midnight open and see what the midnight open here is. So midnight open says that right here, this is your premium and discounted area right here. And the daily range shows that this is your premium or discounted range right here. So anything below here is going to be your premium discount on the day here on Tuesday. Too far. On Tuesday here. So this is going to be your ideal buys below here, right? And we can see price pretty much use it the same way we'd kind of use that midnight open. So that's just another way to use it. And yes, you can also grade it by quarters again, right? And kind of go like it, kind of do it that way here. But yeah, do we have any questions about this now? All right, cool. Then that will pretty much be it. And yeah, I mean, again, you could also use it on the weekly here if you guys really wanted to. Right, draw your equilibrium out here, right? And this is where, right, we see right here, right? Off the last week's, this is last week's range here. So just want to draw your quarters or draw your premium discount here. So anything above here is going to be premium of the range here. And this is where you get your good daily range here. This is where you're able to see a good amount of things. All right. Any questions? If not, then we're going to wrap up the session here.